Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the marijuana cannabis sector. Okay, yeah, check it out. It has me snoozing right now, the cannabis sector. Unfortunately, the charts have gone sideways on us, and a lot of stocks are under pressure right now in the sector. Yeah, if you check it out here, this is Canopy Growth, the sector leader. And as you can see here, it's down another 1.8%. It needs to stay above 50 on RSI. If it dropped below 50, that would be a sign that the chart is getting weak. Down here, what you really want to keep an eye on is this middle Bollinger Band here, currently at 49.84. That's this dotted purple line right here. It's going to need to break above that level to get an uptrend going. Right now it has a downtrend. It started a downtrend on this red candle right here when it closed below that dotted purple line. That's the middle Bollinger Band. And right now it's starting a new downtrend. Now that downtrend could easily reverse if it can get above that middle Bollinger Band and start pushing higher. It's just in this tight sideways channel. Right now the top of the channel is up here at about 52.50. It's going to need to break above the top of the channel to head higher and get back up to that 57 level. Now if it were fails to get above that 49.50 resistance zone, it could pull back down here and retest this lower Bollinger Band at 45.22. If that level failed to hold, then you have this low close here at 44 on deck, and then below that is the 50-day simple moving average at 40.95. That is the downside risk. If the middle Bollinger Band in the 50 level fails to break, the downside risk is a potential retrace down to that 50-day simple moving average. Okay, so it's very tight sideways channels. When it's a sideways channel and you're just looking to trade, it's best to be on the sidelines and wait for either a break above resistance or a break below support. Either you're going to play the bounce or you're going to play the breakout. But if you load in between, you could just get stuck with this sideways action. Like anybody that was looking for a trade that jumped in here, they could just be riding for days and days and weeks going sideways while their money's being tied up. Now, it's one thing if you're a long-term investor, but for the traders, you don't want to get stuck in a sideways channel. Okay, let's look at TLRY here. Okay, yeah, so it closed down 7% today. It's stalling out right now. Keep an eye on RSI at 57. Once again, it has to stay above 50. You have Fasto trying to stay above that 20 oversold line. Right now, it's signaling that it could pull back. You have the top of the gap resistance level is failing to break right now. There was a gap between low of day on this candle and high of day on this candle, and the gap did fill. But right now, this red line right here, the second red line, that's the top of the gap resistance level. Notice how the candles are failing to break through that. It's going to have to get through that top of the gap and then through this closing price in the first trading day of October to head higher. Now, if those levels remain resistant, you could see it pull back down here and retest that middle Bollinger Band, currently at 129. Today, there was a close below EMA 4 at 147. Just below that is EMA 8 at 142.54. Trading below 142.50 would signal downside risk, and you could see a drop down to that 129 level. Check out how on the 24th of September, that middle Bollinger Band, the dotted purple line held, and that's where it got the nice technical bounce. If that middle Bollinger Band support level were to break, that's going to be a major bearish change in trend, and that's where you could see a retrace. That's where you could see a drop down to that 50-day simple moving average at 75. Now, why do I keep mentioning this 50-day simple moving average? Well, that's because another one of the top dogs, CRON group here, that trades on the NASDAQ, it is headed for that 50-day simple moving average. That is our target. Okay, so it's down 4% right now. Notice how it dropped below 50 on RSI. Notice how Fasto is below 20. CGC and TLRY are the leaders right now, and you can see the laggards or this isn't a laggard, but the ones that aren't the top dogs are breaking down harder, a lot of them, and so that is a red flag across the sector. The marijuana sector is under pressure right now. There are lots of companies that have released information that they are diluting, selling shares, raising capital. Everybody used the spike up here to to raise some money. Why are they raising the money? Because marijuana companies can't get loans. It's federally illegal still in the United States, and so it's for the most part it's a cash only industry. And so it's a little bit different for the Canadian companies, but just for the most part, everybody needs capital to expand, and most of them are doing it through selling shares. And so right now, look at Cronus Group here. So it came over hit this 14 high, and the problem is that there's this support level over here in January. You can see the high close right here. That's this red line. Notice how that line broke on Tuesday. There was a close below. That was a key level to hold. All these candles have been trying to hold that level, and breaking below is signaling downside risk. Now, the last two times it broke below, it was able to hold support and bounce back, but this time, you know, it looks like it has a potential to head lower. Right now it is hitting the ascending support line. So notice how the bottom of these candles, it's going to be really important that it holds this level right here. It needs to stay above 10. The downside risk is if 10 breaks, it's going to likely drop down to this 50-day simple moving average at 925, and that would be the reload level for a technical bounce. Now, if the 50-day simple moving average failed to hold, that would be extremely bearish, and you could see a drop down here to the 50 or the 100 and 200-day simple moving averages down here in the 8 support zone. So it's going to be really important that it bounces off of that 50-day simple moving average. Notice that right now it's hitting the high close resistance level from March. These green lines right here are lined up with that March high close and with the with this close here in August. And so this is a really big support level right here around 10. And so it's going to be real important that it gets reversal. Now how are you going to know that it's reversing? Well, watch EMA 4 at 1063. That's the pink line right here. Notice the candles have been riding below that pink line since right here on the 24th of September. All these candles are trading below. There was one small close with that black candle above, but they've been riding EMA 4 resistance lower. That's your clear signal that the bears are in control. Once you see a close back above EMA 4 and that level turns into support, that's when it can get a reversal going. That said, we're shooting for that 50-day simple moving average for a technical bounce. It's down 3 days in a row, likely to get that level tested if the 10 support level breaks. Okay, so check out Aurora Cannabis. They're planning on listing in the US, and so you know this is from September 20th. You know the word was it could happen within the next month. So the countdown is coming, and this could become the next hot runner. This is a top dog in the sector. They do have problems with dilution. You know that's what you know it had been holding back the chart. You know back here when it pulled back and it was failing to run when other stocks were running, it took a little while for this one to heat up due to dilution. And so what's going to need to happen here is it's got to break through this 10 resistance zone. You can see 10 right here. It's all about this cluster of candles over here from January. This is the big resistance level between 10 and 12. And so if it can break above this 10 resistance zone, it's very likely going to run up to this 11 to 12 level. Now this is the high close back here on the 23rd of January, this white candle, this top red line, and that's going to be the key level to close above to head higher. It's right around 1159. Once it closes above that level and turns it into support, that's when it can break out. Right now it's filling the jar. You know, it dropped down and now it's working back up to 12, and then it's going to be all about breaking above 12 and turning the top of that jar into support. And so how will you know if it's not working out, if it's breaking down? Well, I would keep my eye on the 9 level. Watch 9. That's right now, that's EMA 13 at 905. That's this orange line. Notice how on the pullback right here it bounced off of the orange line. That level is your last line of defense for the bulls to keep it from dropping down to the middle Bollinger Band, which is currently at 840. So if you get a drop below 9, it's likely to hit that middle Bollinger Band to test support. Now it needs to hold that middle Bollinger Band to keep the uptrend going. If that were to break, it could come down. The risk on the chart is there is an unfilled gap down here between high of day on this candle and low of day on this candle. A drop down here to 650. You know, if it came down here and tested this 50 and 100-day simple moving averages, that would fill this gap. You know, so it is a red flag that you have an this is still an over-the-counter stock, and it has an unfilled gap below. So that's just something to keep in mind. Okay, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out our chat. All right, thank you.